bid versus ask spread. So the bid versus ask spread is the gap. So we're in a market. So whether it's stocks, options, commodities, whatever, it's in a market. You need a buyer and you need a seller. And why stock prices move? The stock prices move as buyers and sellers change the rate of how much they're willing to buy to sell their product, or how much people are willing to purchase the product from. This is what causes market fluctuations and valuation in the dollar. I mean, even in simple terms, you look at a club. I mean, a club puts 200, 300% markup on a liquor bottle that you could buy in a convenience store, but because of the setting, you're willing to pay more. So that's just a bare bones example of how market, how pricing can fluctuate. So now when you see something like a bid and an ask spread, when you go to buy an option, you'll see the bid and the ask spread. Now the bid spread is the price that the market, people on the market are willing to pay for the stock or for the option, in this case when we're talking about options. The ask is the price that the people who are selling the thing are asking for, right? And where a price for that contract is usually in the middle. So the middle between the bid and the ask is what the market is, and that's what market pricing is, and that's what fluctuates. So as the bid and the ask prices fluctuate, the market fluctuates, and that's what causes like the continual movement in the market. Now the thing you have to be cognizant of is that you want these spreads to be as tight as possible. Reason being is that you want a bid and an ask to be like, all right, so the bid is $1 and the ask is like $1.02 with a 2-cent difference. Like, you want things to be tight like that. The reason being is that when you're purchasing the asset at that point in time, you're kind of really buying it for what it's actually worth at that point in time. Now, if the bid and the ask is $1 to all the way to $2, right? Now that's a wide spread. The middle of that is $1.50. You buying it at $1.50 doesn't necessarily mean that that's really what it's worth at that point. And that doesn't really mean that you're going to be able to get it off at $1.50 at that time. Like, you might have just been the only person willing to buy it at $1.50 and you happen to buy it and your order got filled and that's it. But that doesn't mean if you put it back on the market to sell it at $1.50, someone else is going to buy it. So you want to be cognizant of the bid and the ask spread. You want your spreads to be tighter as opposed to wider. And understand that when you do things like when you use platforms like Robinhood and you place these orders, Robinhood will automatically put you in the middle of the bid and the ask spread. And again, if this is a wide spread, that pricing that Robinhood puts you in the middle for is not necessarily going to be favorable for your positioning. So sometimes, even if you have a situation where you want to enter on a purchase and it has a wide bid and ask spread, it's going to be, and me personally, whenever I'm buying something, I always set my own price, because I'll kind of undercut whatever the middle is just to see if I could get in. I'll try to get in as cheap as possible, and I'll put the order out, see if it gets filled. If it doesn't get filled, I'll cancel the order, re-edit it, put it a little bit higher, et cetera, et cetera. But specifically speaking, when you see a very wide bid-ask spread, you definitely at that time want to put in your own pricing, and you want to go a lot lower than the middle just to see if you could. And a lot of times you probably honestly don't even want to fuck with something that has a wide bid-ask spread, because that's indicative of high volatility in that underlying asset. So again, you're not really going to see a wide bid-ask spread unless there's a lot of volatility in the stock. So, it's kind of a warning sign too that you probably shouldn't be playing with it anyway. So I don't know. That's it. I think I covered a lot of the basic bases. If y'all got any questions on the IG Live, I'll take them. Let me see. We'll scroll down what they got. Can you explain a put? So yeah, I said earlier, a put, essentially a put is the right to sell 100 shares of a stock on for a predetermined price on a predetermined date. Essentially, when you're buying a put, you're betting on you're betting on a price to decrease. If you're betting on a stock to increase, you're going to get a call. If you're betting on a stock to decrease, you're going to get a put. So, yeah, as simple as I could put it, a put is betting on negative price direction. But technically speaking, a put is an option that gives you the right to sell 100 shares of a stock at a predetermined price for a predetermined date. Can you explain? Can I explain the membership, how the membership works, and what comes with it, and how the membership works? I mean, well, right now, Options Gang kind of evolved into a social networking community. So, for those who are not familiar, we have Options Gang is run on a Telegram app, and we have a bunch of different channels for various interests. But the main Options Gang info is kind of held in the main play channel, where I put out plays as they come. I mean, people are guaranteed. I think I said 5 plays a month, but I usually put out more than that. There are times where I've put out just 5 plays, but the plays will come. They don't come at any scheduled rate, like every Monday or they come when I see opportunities in the market for us to make money. So that's one aspect of it. And then on the other aspect of it, we have a great community message board where, people bounce ideas off of each other. A lot of times that's where people learn from. A lot of times people learn from each other. Everyone discusses their various strategies. And one thing about Options Gang, which I stress, is I always tell people, do not join Options Gang if you want someone to hold your hand, because this ain't really the thing to do that. Like, I'll refund people money. Like, it's not a problem. Like, we don't hold anyone's hand. We're very helpful, but it's a very pull yourself up by your own bootstrap culture. And people who actually do want to learn and have genuine questions, like, people will help them out. But this is not a group where I'm holding people's hands and telling them exactly what to do. So even, let me also explain. So, you have the message board where everyone, talks, trades ideas. People in the community offer their own plays. So there's tons of times where people are making money off of plays that I didn't even give. They're just plays that other people gave, shared with each other in the group. So actually, in my opinion, it's funny because I tell a lot of people that that collective is actually more valuable than the plays, because you can't really put a price on a collective consciousness where you'll be able to have that many different perspectives. We got a bunch of people in a bunch of different industries and fields. So a lot of times people could give us information, when we're looking at a stock, they could give us information, actual inside information, whether they work. Hey, Cash, shut the fuck up. Whether it's insider information because they work in the company, or they're just, a professional in that industry and they know the industry. So in my opinion, I think that is more valuable than the plays. But going back to the plays, a lot of times I've screenshotted pieces of plays on my Instagram before. So if you haven't seen them before, just scroll through my Instagram to kind of get a idea of how they're laid out. So when you look at the Instagram, you'll see how they're laid out. I don't tell people when to buy or sell anything. Everyone in Options Gang does that on their own. I don't tell people exactly what strike price to buy it at. I don't tell people what expiration date to buy it at. We encourage everyone to develop their own strategies because, again, everyone has varying risk tolerances. Everyone has varying budgets and experience levels, etc. So with that being said, if I can't give a date because, some people have more riskier risk profiles and they want to play contracts shorter. They want to take strike dates that are further out. Some people are more conservative. I'll put 4 to 6 weeks guidance on a play, and they'll still buy a option contract that's 6 months out, just to play it safe, or 3 months out, just because they're playing it safer. So it's gonna vary on the person. Definitely do not join. I would always recommend everybody do not join if this is not a hand holding thing. I definitely help people out, but this is not like a hand holding type group. We and which is also why I don't advertise, because I'm not necessarily looking for membership. Like, we welcome membership, but we don't want just like any we don't want people people who thinking they're gonna get like some get rich quick scheme, or get the bag quick. Like, we don't want none of those people. Like, this group is really for people that really want to get better at options trading, and who actually want to develop their skills to the point where they actually doing this on their own and they don't need me. So I hope that answers the question. Let me know if there was a part of it you didn't answer. I didn't answer. How long do people typically have to hold the options to make profit? I mean, that's subjective. That's like, you trade crypto. How long do people have to hold their crypto to make a profit? Like, that's like it's a subjective question. Like, do I have a watch list that I trade strictly? Yeah, I have that's a great question, actually. I have I don't know if you can see my screen right here, but I got my watch list here. Right now, it's like about 20 stocks on here. In general, I do have like I would say like I have like a general watch list of like 20 stocks. I have like a main watch list of like 10 that I'm like always probably watching, or probably even less than that. And then any given week, I'm really only focused on a couple. I tell people all the time, less is more. It's hundreds of stocks out there. A lot of times, people will be better served just trying to understand a couple of stocks, or trying to understand a specific industry. Like, you don't necessarily have to. Oh shit, my live about to be done in like a minute. If it cut off, I'll open it back up. Let me see the other questions. So if it's risky. Hold on, I can't really understand that question. So hold on, let me just answer the if I cut off, I'll just open the live back up. So yeah, in regards to going back to the stocks, I tell people a lot of times you'll be better served focusing on a couple stocks. Like, you'll be better served knowing 10 stocks really well than knowing 100 stocks loosely and not really knowing them at all. So you should definitely, I would definitely say in that regards, less is more, and you definitely better served, trying to make a watch list, whether you want to make it industry specific or, certain stocks that you're interested in. However you want to break it down, that's your choice, but you definitely better served doing less is more. Yo, I'm gonna cut off this live because it's about to cut off anyway, and then just re-sign it and then come back on it so we can bring it. Yo, if y'all asked whatever questions y'all had asked in the last live that I didn't get to, if you could put them in this one, because I can't see them. So just for anyone who just joined, just re-put the questions that you had in the last one that I didn't get to. I think one of the questions. So I'll wait for people to join back in. I think one of the questions that someone asked was, do I focus on SNR levels, support and resistance levels? Definitely, support and resistance is definitely important. And for those of you who don't know what I'm talking about, that's more in reference